Good morning, everybody. I'm fired up today. I've been awake for a very long time. I got here extra early this morning because I was so excited for the day because that's how I roll. What are we going to talk about today? Well, we're going to talk about Apple, of course. We're going to talk about Tesla. We're going to talk about
so excited for the day.
actually some
That's
upgrades.
how I roll.
Sorry, that's my own
What are we
audio
going to
there.
talk about today? Well, excited for the day.
We got some upgrades for once. We're going to talk about like maybe Beyond Meat. I saw Dennis tweet about Beyond Meat last night. We'll take some questions from our chat. David Trainer is our guest today. He's the guy that looks deep into the footnotes of earnings reports. Dennis, what's up, man?
Hi.
Hi. All right, let's start.
I just snuck in.
You did. Let's start the show. This is Pre-Market Prep with Joel Elconin, Dennis Dick, and Spencer Israel. All right, gang's all here. Good morning, good morning, good morning. What's up, what's up? How was everyone's night / day?
There's no hockey games. The only one got canceled. COVID.
Oh.
I know. I'm actually kind of worried about this because, you get the UK, they cancel hockey game. I'm like, I don't want to go back into a lockdown. And Canada, US won't, but Canada, Ontario, they'll be like, we'll lock them down again. Like, I don't want to go back into a lockdown. I'm done with lockdowns. Are you done with lockdowns, Joel? I'm done with lockdowns. I'm vaccinated. I don't want to go back into a lockdown.
Wait. The lockdown's over?
No, no. Unfortunately, they locked an Ontario town down, or they haven't locked it down, but they're starting to put restrictions again. Kingston's got a bunch of cases.
Wait, Dennis, Joel's been locked down the entire time. He hasn't left his home.
I didn't know.
Oh.
Okay,
Yeah,
let's
Joel, the lockdown's over, so you can come out now.
Okay, all right. Let me run down. We were trading okay until 4 a.m. and Dennis got up and he was just in a bad mood and he started whacking bids.
It's all my
We
fault.
were up about 14 handles on the
fault.
session, and then we tanked. We went to 40, 50. We took out the triple bottom that I wanted to short going through, but did not put a stop in. Should have stayed up all night. Trying to get back mid-range. Now we had 3 lows in the same area. Old support, new resistance. Early this morning, we got to get over 46. Let's just call it 46.56. Crude up a nickel, 71.34. I don't think gold has ever spent so much time in the 1780 handle, down 310, 1785.20. Silver in the red by 19.8 cents at 22.13. Bitcoin, that's up 11.30 at 47,725. Ethereum futures up $95 at 38.40. Triple D, before I get your opinion on the markets here, tomorrow afternoon, 1 to 1:30, I'm going to be on Benzinga Live.
Ooh, nice.
Yes, folks, on Benzinga Live with Spencer Israel and Gene Munster and Todd Gordon. And we're going to be talking real estate stocks. We're going to be talking Apple. We're going to be talking Tesla. And we're going to be talking about the metaverse. Where we're all going to be living someday.
I heard Gene talking a little bit about the metaverse. I even kind of got a couple Gene picks there. So I didn't even know the ones he might pitch.
Okay.
I'm not gonna spoil it. That's today?
That's tomorrow.
Tomorrow, 1 to 1:30.
Mm-hmm.
Okay, so what are you thinking here, Dennis? You afraid of the Fed?
Yeah, I've been afraid of the Fed. When they pulled the punch bowl away, I've been trying to raise cash. Every time we rally, I sell more stocks. So I don't know. I'm probably up to about 30% cash. I was sitting probably about 20 when the Fed pulled the punch bowl away. But we rally, I sell. We rally, I sell. We dip, I don't buy. Now trading, I dip, I buy. But I mean, long-term investment portfolio, haven't really been buying too much. I sold a couple more stocks yesterday. Sold a bank that had rallied, a Canadian bank, because some of them have come all the way back up. And I just, it's just so many unknowns here right now. I just feel like it's not easy sledding. And you know what? What I will say is sell the rip has been working better than buy the dip ever did. Right now, if you're just blindly selling the rip, it seems like you're making money all over the place because all these rips that we had last week and all these growth stocks, all are right back down. I mean, Upstart, UPST, bring that one up. Beautiful rip from 157 to 200 in 2 days, and it's all the way back down. Unity Software was another one. Obviously, there's been just a ton of reps, like Square, the Square rep, that's gone. New lows on the move. I mean, it's not only that hog yesterday. I mean, even the value name, I was like, well, maybe they'll give it some love, but you're still thinking like, I'm not buying the rip though because they've been pulling they pull it out the wool out from underneath them there, and they did it again. So hog gets a nice rally all the way up to almost $44. Well, and eventually the sellers just come in. They are looking to raise cash wherever there is up action. Sell the rip until further notice. That's how I'm playing it.
Across the board for everything?
Yeah. Yeah, because you could say, you know what, and obviously the staples have really, that rip has not been sold. They continue to get bought, but this is not the kind of market that is healthy when you've got all the growth getting hammered and you've got a flight to staples, you've got a flight to Apple, and the Apple flight kind of that got pulled out a little bit yesterday too, getting help with an upgrade here today, but. I mean, it's not a healthy market. This is usually the signs of, of some trouble when everybody's flying into staples. So, and do I really want to fly into staples like when interest rates are going higher here too? Because these are just, you're in them for the dividend. Well, those dividends aren't nearly as attractive. I mean, are you actually going to even beat inflation in stocks like Procter and Gamble long term? I'm not sure about that. So, you know what? I just think like cash is king right now, at least for a little bit. Now, eventually, we're going to get a hell of a buying opportunity. But why am I going to be the hero? Why do I want to catch the falling knife? Why do I want to buy a stock when it's making a new low? People will be talking about, oh, well, Square. Okay, well, you do have a level, 170.75, but if that gets taken out, that's making new lows on the move. And I don't like to buy stocks making new lows on the move. So have your levels. There's a few that haven't breached those Monday lows from last week. Those are, attractive as long as those Monday lows hold. If they don't, though, I just think we're in this market where it's not easy buying the dip.
The one thing that concerns me, not so much right now, but like a month from now, is, and obviously I don't know the answer to this question, but like how much of this weakness here is just end of year tax loss selling, and we turn around in January, we get a conventional January effect, which basically just means a lot of buying. I saw a chart this morning that said if you look at just U.S. Equity funds, mutual funds, and ETFs, there are more inflows in January than there are every other month of the year combined on average.
Yeah.
There's a lot of buying happens in January, right?
Yeah.
So
January effect.
right. So that concerns me now because because there was stuff that I would like to buy, but I'm not. I haven't been right. I have a short shopping list, and I'm concerned if I don't buy now, will I be able to pull the trigger if we do have a run up? And I don't know. You know what I mean? So that's why I'm sort of
You
flirting with
could
it.
buy a little bit, but
Yeah.
I just I don't feel the urgency that, oh, I'm gonna miss it. I don't feel like and especially in the growthy names. I mean, some of these value names, maybe they are getting too cheap. Like maybe a Macy's is getting too cheap. Again, though, it's making new lows on the move every day. So why do I want to be a hero and call a bottom? I don't wait until the stock starts going up. So it starts looking a little bit healthier. Because right now it doesn't look healthy. And yeah, you can say, okay, yeah, it's trading 5 times earnings. But again, some of these earnings maybe have been elevated because you got that little oomph from everybody going back out to stores and stuff. So and the reopening trade, like maybe it's to do with the variant here, but all these stocks have really been hit hard. So there is some opportunities out there, maybe if you've really got a long time horizon, but I just don't feel like I need to do it today.
Yeah, I don't want to do
Maybe
it.
I'm wrong.
I don't want to do it today either, but I also and we're afraid if I don't do it soon, I will miss my. This is a nice fat, in some respects, a nice fat pitch because we've got a lot of stocks that down a lot this year. You know, I'm afraid if I don't do it soon, I'll miss my chance. So that's sort of the what I'm struggling with right now and trying to fix. So maybe the solution is to scale into something, but yeah, I'm certainly with you. I'm certainly not
It,
trying to buy this dip on any.
it's a really tough
Yeah.
investing market
Yes.
because, like I said, in cash you're losing to inflation. So you're like, I kind of want to put it to work, but then at the same time you're looking at these charts and you're like, okay, a lot of these charts look like hell. I mean, SPY's been the best place to be forever because they just rotate into those leaders. But even Apple yesterday, maybe this is where we should start to move into Apple, makes the new high, almost hits the $3 trillion market cap, and then they pulled the rug out from under it, and the stock fell $7.
Yeah.
So it's like, okay, well now that starts to be a concerning candle. Yes, you were lifting here this morning because you have an analyst upgrade where I don't know why, like you said, they want to upgrade it now. I guess they like to buy the dip, but a little Johnny come lately, I think, on this upgrade. I think it's an opportunity to lighten up. Now, again, I'm holding on to my long-term Apple, but as a trade here, I don't know.
That was a big, I mean, a very, very extended move, right? In Apple, right? This was like, oh, they're not going to sell any iPhones or iPhone problems, so you're straight up over 20 points. Folks were ganging up at 182 in the pre-market, and that ended up being pretty close to the high, trading up a buck 32. Did you get your all-time closing high yesterday? Let me see here. I think you did. Your all-time no, no, you didn't. 79.45. Oh, wow. What a great number that was yesterday. Maybe not early on, but it would have came back down to there. I'm keeping an eye on 175. I mean, 2.5 bucks away. That splits the lows from the last two sessions. So until it takes out 175, you still got to favor, a little bounce here. All time closing high is what you want to look at today as a good number. 179.45. That was your high on Friday.
I tell you, I'd love to come out here and say, yeah, I think we should buy. Santa Claus is coming to town, and part of me thinks that, like, it's a really don't. This is a really tricky market to call, because you do have, the potential for a Santa Claus rally. You do have the January effect coming, so timing wise, feels like we should start buying pretty soon. But then the technicals on some of these stocks, and then you look, from a valuation perspective, and you're like, well, nothing is cheap. There was, everybody was flying around Twitter yesterday. They were looking at the P's on the mega caps, and they're trading like 35 times for the most part, which is right back to where we were in 1999. So, I mean, nothing from a valuation perspective is very cheap. Again, there is some retailers, there is some of these reopening trades that have been beat up to enough that they are cheap from a relative valuation. I mean, do you nibble? General Motors got killed yesterday. Do you nibble into something like that, or is it like, am I early to the party? Ford, breakout over 21, still holding over 20. Are you buying that on the pullback? Maybe, but there's so many bloody unknowns, and the big unknown is the Fed. And if they really are pulling the punch bowl away, all stocks could go down together.
I think the Fed has telegraphed what they're going to do, Dennis. I mean, I think
That's when the market's trading it. They've said the punch bowl's gone. He said it. He pulled the transitory word. What do you like? They have telegraphed it, and that's why the market's been weak. It's not
weak,
variant.
weak. We made an all-time closing high on
Joel,
Friday.
you got to get away from SPY. Your clouded SPY vision is really clouding you, because the average stock is down over 20% this year. That's your stats.
Well, who
IWM,
was it?
bring it up and look at IWM. We have been
What
very,
do you get
very,
in
very
the words
weak.
of J.C. Peretz?
You have
What do you
3
get
stocks,
when you buy
5
average
stocks holding up
stocks?
SPY. SPY is great. I own SPY. It's been the best investment vehicle because it doesn't go down. But start looking at other stocks. Look outside of SPY.
So,
do you think Square? That's been good. PayPal?
Do I own
That's
it?
been good.
No.
MasterCard? Do you own Tesla?
I
How's
own
your
a small
Tesla?
amount of
Do you own
Tesla. and all
Peloton?
that.
How's your Peloton?
wait,
No,
okay,
you're talking about like less than 0.5 of 1% of my portfolio. I mean, those things can go. There's so many things that could go to zero.
But
I don't
okay,
know.
so
I
you're
just don't look like
positioned
it.
well.
We have to buy. Like, you don't have to buy. Just sit with what you have and ride the storm
I'm
out.
going to go out on a limb and say the majority of investors out there aren't down 1% right now. I'm going to say, it's probably a little bit uglier for some retail investors, because the average retail stock, like that has been talked about over the course of the last year, is getting crushed. I mean, obviously AMC and GME didn't make sense at all to be where they were. They're hammering those stocks right now. They're hammering whatever hot story stock was out there. And maybe that does make sense. Fundamentals are mattering again. So maybe it does all make sense. But, to cloud and say, yeah, this has been a fantastic year for investors. I think if you're in SPY, it's been a pretty good year. I think if you're outside of Apple and Google and SPY, you're kind of like, I don't know if the investing year was that good.
can we move on to like the big headline of the day, which was Pfizer here? Because Pfizer came out with some data on their pill. We know they were working on that. They reported phase 2 and phase 3 study data on their oral treatment, which is a pill of COVID, and they said that this pill reduced the risk of hospitalization or death by 89% within 3 days of the onset of symptoms. So that happened. That's great news. Obviously, you would maybe if it were a different time, if it were a few months ago, you would see reopening stocks move up off that. I know Pfizer did, but the reopening stocks really, at least the ones I looked at, hadn't really moved so much this morning at all. Um, and maybe that's more telling, right? Is that reopening stocks aren't moving off of what is an objectively great headline.
I don't think they care.
Okay.
I think, and I do think maybe if we start to go into a situation where it starts spreading and the lockdown starts, and maybe that's what it's saying, is that this isn't going to keep in check. I don't know. There's so many bloody unknowns. So maybe to Joel's point, I mean, if you want to get the hell out, you get the hell out and spy at the highs right now. There's so many unknowns, but maybe that's also telling that it's held up this well,
Yeah.
and there's been some bad stuff going on out there. Maybe that just means you just want to stay with that.
I'll do a little Dennis rant here. If you're buying Pfizer up a buck 50 in the pre-market, you're doing it wrong. I mean, this thing went to 56.40, Dennis.
This
I
morning.
mean, at 7 o'clock, this went to
Yeah.
it went to 56.40. That's like a new all-time high for it. Just looking for a quick reset at it. Now you're down 31 cents. Now you just got to just forget about that pre-market action. I don't know if you're going to get back up there, but look at the close from yesterday. If you're looking at resistance, that's 40 cents away. All-time closing high by a couple bucks. Oh no, by over a buck. So I still like 55.20 as resistance, and 55.73. That was the all-time high made in yesterday's session. And as
Yeah.
far as like this virus and stuff, Dennis, I thought you were only concerned with if people were like dying. People are getting sick. People get sick. That's the course of life. You got sick.
Yeah.
Yeah.
It's I just
I think so. I don't think that the variant is as strong. You when you were in the hospital, you were even saying that that your nurse was saying the same thing,
Yeah.
Spencer.
Yeah.
I think the variant is weaker. I'm looking at the death rates, and I'm not seeing it much higher than the flu. So maybe it's weakened itself to just be a little bit of a bad flu now.
that's
But
what
some people are
happens.
getting it bad. I mean, don't kid yourself. Some people do
Right.
die from it. But I'm not coming here. I am not sitting here worried about the virus. I'm worried about the Fed.
Okay.
We
Fine.
know. We know.
I don't, as a market investor right now, I'm not sitting here and saying, oh, Omicron is true. We went through this. We know technology stocks. If the market was really, really worried about the virus and selling off because of the virus, they wouldn't be hammering technology stocks. That doesn't make any sense, because we know the technology stocks work better in that environment. They're the ones that kicked ass in 2020. So I think this market is worried about the Fed. I'm worried about the Fed. I'm worried about inflation. You see it running as hot as it has in 40 years. They've got to tackle that problem. How do you tackle that problem? You stop the printing press, first of all, and then you start jacking rates. That is not good for any stock. That's why prudent money here has at least a little bit of cash.
I know that on paper, rising rates is bad for growth, but we were in a rising rate environment for 5 years, 2015 to 2020, and growth did just fine.
Well, no, we were in a rising interest rate environment for about a year and a half in there, from 2016. When did they do the rate? Because you did
No,
this
no,
exercise
no,
with us yesterday.
no.
They definitely weren't raising rates in 2019.
No, okay, here. Well, they announced it in 2015. Okay, so first you have to announce it. You got to get everyone used to the idea. And then they raised rates here. I'll pull up a
For
chart.
a year and a half in there, up to like 2018.
I'm looking. Give me a second.
I feel like we did this exercise.
Yeah, we did. So they raised rates how many times? They raised rates once in 2016, twice in 2016. They did in 2017. They did in 2018.
That was it.
And the last hike came, looks like, is that the end of 2018 or early 2019? So okay, it's fine. So for 3 years, we were in a rising rate environment, and growth did just fine in those 3 years.
We
Right?
didn't have inflation then, though. There was no inflation.
All right, you got me there.
40 years. We don't know, like, what, I don't know the repercussions. This is like, I've only been trading for 22 years. I don't have a playbook on inflation. So I'm just going from the textbook and saying I'd rather own commodities. I'd rather own some inflationary stuff. I'd rather not own high growth. And you know what? That playbook is working right now. I don't know when that playbook turns. Maybe it turns January 1st and they rebuy all these Kathy names that have just been hammered. But again, I look at these Kathy names and I think, are these stocks cheap? Are these stocks, they're not cheap. So
they're cheaper.
They're cheaper, but they're definitely not cheap on a relative basis. And then the market flies into Procter and Gamble, and I don't know. It's a really, really tough market to call. And when I don't know, I'm gonna just have a little bit more cash just in case.
When I
So I
don't
think you can
know,
nibble on some stocks. If
raise
you're
some
100%
dough.
cash, you should absolutely be nibbling. I think if you're 100% cash, the time to be short, like people are talking about shorting GME. Well, GME just fell $100 in 3 weeks. It just fell. It just got cut in half. I mean, the time to short GME was probably three weeks ago, 2 weeks ago, maybe even last week.
How is
Now it's
time?
oversold. So I wouldn't be shorting GME now, even though I think GME could go a hell of a lot lower. It's like I'd want a rip to sell into. Just like even the Kathy ARKK, you got that nice rip to sell into. Sell the rips, don't sell the dips.
Wow, that was a bad day yesterday for GME,
A
huh?
bad morning too. It's down again.
Yeah.
Down another $4.
That's the 128 this morning.
AMC's 21.75. I mean, is it going to $10? I think eventually it could, but I also
I
think
could tell
this
you one
came from
thing, it ain't
30.
going back
It
to
was
70.
it was $33 4 days ago. So do I want to sell it at 20? It just got cut by 40% in 3 days, or 30% in 3 days. So now you need a rip to sell into. Do I think you should be selling the rip? I do, but I don't want to be selling selling it short now after it's 33 to 21. I mean, it's lost $12.33. It's lost 33% of its value in 3 days. So we know why. That the tip off was when Aaron was selling it. That was the start of the complete sell off in that stock.
Actually,
Really was.
out of curiosity, what day was that? So
Thursday.
Let me guess.
how do you remember? Hold on.
Was it last week?
Yeah, so it was Thursday.
How do you remember that? I'm looking.
I remember things.
No, you
It
don't.
was probably Wednesday after the close.
I think I'm right. I think it was Thursday.
I'm losing track of my days here. It was. Oh man, he might be right.
It was
Yeah,
Thursday.
it was Thursday. All right.
Yeah, and look. Oh, there's the start of the red candle. Another red candle. Another red candle. I mean, we've got the whole theory behind the whole AMC rally was they were going to all hold together, hold strong. And then you get the leader of the whole company and the CFO dumping all their stock. So everybody's like, wait a second. Wait a second. And I think you had a lot of people follow suit. So not holding. I mean,
$20.
it's always easy to hold strong when a stock's not going down. When it starts going down, that's when you really see who can hold. And I tell you, there's a lot of people not holding because the stock keeps going down. But with that being said, we're probably oversold in the short term. We probably do for a little dead cat bounce.
$20 is so big because it topped out just above 20 in July of 17, and then it did the same thing in 18, and then the first ramp up it got to 20. This was back during December or January of 21. It got to 20, and then came back down, was a little bit, mellow, but when that thing busted through 20, I mean, that is when everything went absolute bananas. So
Sounds
20's
like
the
a
level
logical
on the
bounce point.
downside. That's
Yeah.
I'm not buying it there. I'm
I
not
think I'd cover
selling
a
it
short
there. It's
there,
going to
short
20.
term.
I don't know about 10, but I
Would
know
you
it's going
cover
to
a
20.
short at 20? I would cover a short. If I shorted this thing at
2005.
30, yeah, 2005, 2010, I'd bring in the short. And then
Yep.
maybe wait for a bounce to reinitiate.
Yeah. Yep.
Can we just say that the alibi that Adam Aaron gave of selling, oh, it's because I'm doing estate planning, that's an all-timer. That's an all-timer right there. I'm in my 60s. I need to plan. I need to diversify, do some estate planning. Great one. Okay,
All right, let's talk about some real stocks.
yeah. Okay, so let's move on here. I do want to bring up some ratings today. We never do that anymore, but we had a number of interesting ratings. I'll just show you the pro here. We upgrade and downgrade. We already mentioned the Apple upgrade, which is sort of funny because it's been on the run. But Beyond Meat caught a rare upgrade yesterday
To neutral.
from Piper Sandley, yeah, to neutral. But if I go in the pro and I look at Beyond Meat, do a search there. When is the last time we even had, a Beyond Meat upgrade if you sort by date. May was the last time. So it doesn't happen that often. And if you look at the chart that Joel has up here, you can see it responded to the upgrade.
They do respond to upgrades. I mean, let's call this though. I mean, whoever comes and buys this at $69 last night because they upgraded to neutral. So you had a bearish analyst that said, okay, it's come down enough. Let's just go neutral on it. They didn't go buy. And the stock was trading up 10% last night on this Piper upgrade. At one time, it was up 10%. I tweeted about this and I was like, this is just, lunacy. You got a stock in a hard downtrend. Some analyst goes from sell to neutral, just saying, okay, well, I'm not selling it anymore. And the stock goes up 10% on that. Crazy. That was a gift last night at 69.
So
I'd
they
sell
did.
all bounces in Beyond Meat until further notice. That's what I would do on it. I think the stock eventually could be like a $10 stock. I'm not joking. But, again, you're going to see a bounce today. It's neutral. But think about this. This is, out of all the growth stories that are out there, Beyond Meat is not the story I want to get behind. This is probably the worst of the worst, in my opinion. We had
It
Mark
tastes
Yusko, who was involved with, obviously, the underwriting. He was involved with, the company very early when it was a
Yeah.
private company. And he said when he could have started selling that stock when it came out, and that was when it was $90, he was selling as fast as he possibly could. There are so many other alternatives to Beyond Meat. The stock's was trading at one time worth more than Tyson Chicken. I mean, the stupidity of this stock from valuation perspective was epic. It was a poster child for, people just blindly buying anything on a hot story. This story is ice cold. The burgers aren't even good, in my opinion. I would sell every rally possible in this stock. And I think eventually it could be a hell of a lot lower. Do not
this
like
was a
Beyond Meat at all.
sneaky upgrade, huh? Because it was after the close, right?
Yep.
From what I'm seeing on the chart,
Yep.
usually, they do it in the morning, so that was
No,
kind of
there's some. There's some.
some.
Yeah.
Right, right. What I would say, and not in the stock, don't plan on buying it or selling it, but if you're in that, like a day trade makes a new low of the move yesterday, and then it gets a pop. I mean, your 2 day high was 69.15, and hit 69 one time, and then it got just a tad over that, went to 69.46, but if you're in those kind of situations and you're long, I mean, just go look at look at your dailies here. I think it's going to have a hard time getting back up there to that area. Maybe you get a little fluff off the open, but you're $3 off that. So I
Maybe
don't
get a
know.
short squeeze here or there. I'm sure there's some
Yeah,
high short interest. So, maybe they can squeeze them a bit, although there isn't a lot of shorts getting squeezed right now. I'll tell you that much in any stocks.
I'll tell you,
Um,
right? I'll tell you what the
I told Lisa not to buy them a while ago. She's
30,
like, I said, just don't
36,
buy them.
36%, Dennis. Yeah, that ain't nothing.
so there you go. So that's a
Those shorts are.
catalyst to eventually get, and maybe that's what happens last night is, you get the shorts panicking that it got an upgrade. It's still worth $4 billion. Holy, it's worth $4 billion. Tyson Foods is worth 30, but at one time, remember, it was approaching Tyson Chicken, which is like they make everything. It's like your biggest chicken producer in the world. And you had Beyond Meat was going to take them out. We were never going to eat chicken again. Well, that story cooled off.
Yeah, that was fun. Okay, what else do we have this morning? We had Unity catching an upgrade to buy, or I guess overweight, same thing.
Yeah,
Morgan
yeah.
Stanley.
Man,
So ticker U. Going back to probably a stock that Dennis finds more attractive in general.
Yeah, for sure. I love the Unity story. So if I was going to jump into something, it would be a Unity software. And I have jumped into the stock a couple of times. And I would, I'm not buying it up the $3. Right now, these kind of stocks are just out of favor. But is this one on my shopping list? Absolutely. Because I do think, the thing behind the thing, Pactor was on the show at 100 saying he loves it. I love
it
Pactor.
was lower than that when
It was like
Packer
90
came up.
$95.
Yeah,
Like the first time I
yeah.
bought it was when he was on the show. But if it got back down to 100, would I strike? Yeah. Do I think Unity software could eventually be a lot higher? Yes, I do. Could you nibble onto some? You could. But again, these stocks with the high valuations are really out of favor right now. But this is going to be a stock that if growth comes back into favor, this will be one that leads the charge. So I love this story a lot more than like a Beyond Meat. Like you think about, okay, you got all growth out of favor, these high valuation stocks out of favor. Do you want the metaverse stock or do you want the fake meat stock? I'll go with the metaverse stock. So I do like the story here.
Area of interest for me, pre-market high. We're too close to it for me to say that the rally's done at 144.80, but first things first, if you're long, you want to get it beyond. Oh boy, November PPI must not be good, huh? We're tanking. What's
Wow.
going on here? Dennis, cancel bids. Dennis, cancel bids.
All
Probably
right.
didn't have any out there because you're
PPI
I
came
don't
in.
think I had a lot of bids out there. I had sells
PP,
out there.
PPI a little higher than expected, 0.8% month over month compared to a 0.5% estimate. Sorry, PPI did increase a smidge month over month. Or I'm sorry, it increased. Yeah, it increased from 0.6% in October to 0.8% in November, so up a little more than
okay.
expected. But you know,
We're headed toward that pre-market low of 40.50. Nothing there. Just going back to this daily chart. This I just don't like this formation here, upper right. I mean, you had the three lows in the same area. A lot of air underneath here. I mean, we had that wicked rally last week, and I don't think we're gonna come right back down through it. But
Uh-oh.
hello? Did I hear something else?
no, we're good.
No.
We got you.
Just to, and I was just looking at the closes in this area, trying. I just this is not a healthy formation here. Taking out that triple, the three lows in the same area, and you're opening up a little bit to the downside. So we'll see. Next daily low is actually under 4,600. That would be 45.8075. That would take a little bit of a whooping today to get down there.
And just to finish up on this here, what happened to my ratings page? There we went. So on the upgrades front, we mentioned Apple, we mentioned Beyond Meat, mentioned Unity, CrowdStrike, got one at JP Morgan. Actually, JP Morgan had a big old note today on the space. They were upgrading CrowdStrike. They were
On new low.
they
Sorry,
were
sorry.
they were downgrading Adobe, Akamai, Cloudflare, Datadog,
Wow.
Bluecoa, Amdocs, SolarWinds, Zscaler. Big on note from JP Morgan. Ralph Lauren caught a downgrade from Goldman Sachs. That one's interesting. Ralph Lauren actually and Ollie's, OLLI, they both caught actually and Big Lots. Big Ollie and Ralph Lauren all caught downgrades from Goldman Sachs this morning, all to sell.
Wow.
And I think that's all of note here that I'm interested in. Yeah,
That makes me bullish seeing all those downgrades.
Comcast
But,
Comcast caught another downgrade every day. It seems like with Comcast, that stock can't stop going down. So, poor Comcast. Anyway, okay. It is 8:33. We're gonna have David Trainer on in a couple of minutes. We like David because he's the guy that like looks at the footnotes of the earnings reports, and he actually
Yeah, does
we
his
like
homework.
he looks through the adjustments. So real fast before we get to that, I just did want to bring up Tesla for just a second because
Sure.
we did have Elon. We were wondering, we don't think he's done selling based on like the math of it all. He would probably have to keep going, but he hadn't sold for a couple weeks. Well, he sold a little bit more last night. Not a lot, but a little bit. I shouldn't say he sold last night. The following hit last night, he actually sold on the. Oh wait, no, I'm sorry. It was yesterday. Was the transaction? And he sold 169,000 shares. Not a ton. So some more selling, insider selling from Elon Musk. He'll probably keep doing that. And if you hadn't seen Dogecoin this morning, I would recommend checking that chart out because Elon Musk tweeted about Dogecoin, and Dogecoin is going to the moon. So this has been.
yeah, what's it at? 20 cents?
Yeah, 20
Oh, we're
cents.
way past that, Joel.
21,
We're way past 20 cents.
22.
Where's my Dogecoin?
All right, I'll just for Tesla. I mean, if you looked at any of these charts of any of these growth stocks, and you've seen this formation here, I mean, 910. I mean that fills the gap from October 22nd. Will it do it today? Will it do it right away? No, but I mean, you're gonna get a look at 900 in this stock. You're gonna get a look at 900 long before you get a look at 995, and I'll even do that with it in the whole $20. There's just nothing in there. There's
Joel
nothing in there.
talking
Just
against his buck. We're the only people that talk against our bucks, although it's kind of Lisa's buck, right?
yeah,
I gave
yeah,
you some heat on
yeah.
that before, but it wasn't a Joel Elconin hold.
No, because we went out. I know why she liked it that one time, but I just think you gotta date with 910 here, and if you really want to get bearish, 850.
And Joel, actually, props to you. You were right. Dogecoin is at 20 cents on the button.
Pretty exciting.
There you go. Well, look at
Yeah.
that spike this morning. Look at that. Look at that.
Gotta go
Wow,
out
from
buy. I'm gonna go.
16 to 20. That's a
22.
moneymaker right
16 to
there.
22. You don't even know. Anyway. All right.
There's so much money in just nothingness.
Yeah, I
Like, I
know. It's
mean, at least Ethereum, like, and I have some in Ethereum, has a, as the network, it obviously has, a lot behind, running all the NFTs. I mean, what does Doge do?
No, that's the point. Yes, you're
It
right.
doesn't do anything.
There's so much money in nothing.
Yeah. Like, what are you thinking when you're investing in nothing? Like, you got to go back and say, oh, yeah, but its story's hot. Other people are going to invest in it.
I'll tell you what they're thinking.
Yeah, please.
This is a lottery ticket, and if it
For
hits,
what? It's a lottery ticket to burn money.
and if it hits, I'm rich. That's it. It is not any more complicated than that. This is a lottery ticket, and if it hits, I'm rich.
Dennis, did we
That's
teach
all
that
these
in the
stocks.
class on Saturday?
No, we don't. We sell lottery tickets. In this market, that's what option trading does. It sells lottery tickets because in the majority of those lottery tickets, I did an exercise. I remember, like, I don't know, it was like 10 or 15 years ago. It was like Lotto 649 in Canada, and I was like, I just want to sit here, and you could like go on the site, you could type in numbers or whatever, and you could see, how much it made over the course of, the entire eternity of time. I remember sitting there for like 20 minutes. I typed in like 200 sets of numbers, and the most that I won was like 100 or like $1,000. And it ran that lottery for all the lotteries that ever happened in 80 years. So you think about that. You run, 100 sets of numbers forever, and you make like a couple grand or something on the one lottery, on the one hit. I mean, the most I got was like 4 numbers. You couldn't even get the 5 numbers. You have to get 6 to win it all. So you're sitting there buying lottery tickets. You want to change your life. You want to have your fun. It gives you thrills. That's fine. It's entertainment. If you're trying to buy lottery tickets to change your life, you're trying to buy, Doge to change your life, in all likelihood, you're just going to lose that money.
That was very reassuring. Let's bring on David Trainer, the founder and CEO of New Constructs. Let's bring him on right now. David, what's up, man? How we doing?
I'm doing great, though I would say I think the odds, honestly, and I believe everything you say, Dennis, about throwing away money on crypto, I think the odds are better in crypto than they are in the lottery.
You're probably right. We'll give you that one, David. We'll give you that one.
That's what you're saying, right? Like, I mean,
you're telling me there's a chance.
Yeah, I'm telling you, and that's all people care about. I think Spencer's right about that. I mean, they're just seeing it as a lottery ticket, and because it goes up, right? And most of the time, like, your odds are way better than just boom or bust on a lottery.
I think you probably got a point there. It's probably is better odds than the lottery.
It's not rational. I agree with you. It's still not rational, but it's more rational than the lottery.
Talk to us about rational. We need some rational thought in this market because we've got the S&Ps, which are very near all-time highs, and then you have a completely different market in growth, where these growth stocks have been hammered pretty much all year, but really hammered in the last month. You've got, GME, AMC finally coming off. Is this market reconnecting with fundamentals?
It feels like it, Dennis, right? I mean, I love your point about the dichotomy in the market. Everything on the surface at the index level looks pretty good, but there's some serious blood in the water underneath. And it feels like a lot of these growth names are getting reined in. The expectations embedded in those valuations still are extremely high. I mean, we do what's known as expectations investing analysis, where you reverse engineer what the company's got to do to justify the price. And the growth expectations of 15, 20, 30, 40, 50% compounded annually for a decade are almost non-existent in history, right? These companies are expected to grow in ways almost no company in the history of the world has ever grown. And so, yeah, it only a matter of time for those things to come falling down, just because there was no way they were ever going to live up to their valuations.
And that's where we're at, is we're reconnecting with reality here. So we've had a sell-off in some stocks here. Is there anything you're looking, Santa Claus coming to town? Is there anything you're looking at buying here, David?
Well, we recently did looking at buying. Yeah, one of the things we just did a big piece on Royal Dutch Shell, an oil major. And we think it's a very interesting place. All the ESG greenwashing has flooded all this money towards, some ridiculous places like Rivian and Tesla. Meanwhile, firms that produce the good old fashioned energy and are also very well funded to move into alternative energy are being treated like trash. One man's trash is another man's treasure. And so, yeah, we think Royal Dutch Shell, and we're going to do a deeper dive on some other names in the space. but that stock's trading as if its profits will permanently decline by 30 or 40%. And when you look at the oil demand forecast, even if you optimistically assume that everybody abides by the Paris Accord, it's only going to be 18% lower 10 years from now than it is today. And in fact, oil demand is going to be going up over the next couple of years. And that's from the most optimistic assumptions I think possible. And that would be that everybody abides by the Paris Accord, which we know in reality almost no one does, right? So even if they do abide by that, we're only talking about a very, very slow decline in demand. Not to mention that Royal Dutch is very well diversified into liquefied natural gas, as well as other alternative energies. And they've got the expertise and distribution network to monetize that in a way that no one else, almost no one else, another super major does. So really cheap stock, really great demand outlook, really strong profitability. I mean, talking about hundreds of millions of dollars of cash flow to further fund alternative energy development. Anyway, we like that space. We think it's overlooked. And I think I like to think that some of the capital that's going to be sort of reined in from these overpriced growthy names will move into some of these cheaper overlooked names.
Is there anything that like what would it take for like a growthy name or a recent IPO? I know you hate those. What would it take for one of them to for you to like them? What would have to happen there?
Some of these stocks got to come way in. I mean, there are a couple of IPOs that we've covered this year, Figs and Authentic Brands that and Authentic is not out yet, but Figs, for example, we've said, look, they've got actually a profitable business model, a super high return on capital. They're filling a new niche that no one's filled before. And we felt like that stock actually came out slightly undervalued. It's since down as well. But we were desperately looking, honestly, to be bullish on an IPO. But Spencer, the honest truth is on a lot of these IPOs, Sweetgreen, the most recent one. I mean, look, I don't know how they ever make money selling salad, right? I mean, look, I lived in Manhattan for a long time, and back during the tech bubble, even then they had these ready to make salad bars. Every deli has a ready to make salad bar. There's zero moat on the Sweetgreen business, and I just think it's a gimmick that unfortunately too many investors bought into. They bailed out some private equity guys who needed to get it off their books. That one's got to go to zero. A lot of these others got to come way, way down. I mean, I think Tesla's got to come down to 200, 250 bucks. Most of these stocks would have to come down 80, 90% before they would make any sense in owning.
I think the plethora of fast casual IPOs this year. Well, I want to look into that because there's been a lot of them, or like just general chain restaurant IPOs. It seems like a lot more than usual, and that cannot be by accident. So okay, you like Royal Dutch Shell. Is there anything outside of the oil patch that you're into right now, or not really?
Some more traditional names, GM is on our focus list.
Okay.
We just think that's undervalued relative to its actual earnings power and its ability to move into EV. The way the auto market is priced these days is that the upstarts are going to take like 150% of the market share by 2030, and every incumbent ice company is going to effectively, go to zero. So we think the risk reward there is great. We like some, consumer staple names as well. We just recently did a smaller feature on Procter and Gamble, and we think, man, it just makes a lot of sense. In a world where we feel like you might want to start positioning yourself to be a little more defensive. I mean, the company makes tons of money, pays a great dividend, and people still got to buy that stuff, right? It's not like the demand on that's going to fall off the shelf. Clorox is another name in that space that we also like. We're generally pretty defensive these days.
Yeah.
How much do you care, David, about the Fed tomorrow? Is that like on a scale of 1 to 10? Like how much do you care?
Well, I mean, it's sort of a trick question. I think tomorrow's going to be a big day.
Okay.
I think the Fed is increasingly recognized as being backed into a corner. I think Chairman Powell had to play nice until he got reelected. And now, and seriously, right? Like, look, it's every politician's job to get reelected first and foremost. And now that he's sort of past that hurdle, he's got to think about his legacy. He doesn't want to go down as the guy that led us over the cliff. And I think now he's going to start to get real. I don't think it hurts on that front that the numbers, inflation expectations at 6% are the highest they've been in in like a decade or 2 or 3, a long, long time, right? So I think the chickens are coming home to roost. I think tomorrow's going to be a tough day because look, you guys have talked about this, as all sophisticated investors have talked about the fact that this can't go on forever. We can't print money. We can't pretend there's no inflation. We can't have stimulus. We can't spend money like there's zero cost to it forever without inflation. At some point, the chickens are coming home to roost. We didn't know, right? If interest rates couldn't go down forever, and I think the chickens are starting to come home. The longer they wait, the faster they have to get back, right? So it's in Chairman Powell's best interest to start getting going on this as gradually as he can, because most people think he's maybe already too late.
All right, this has given us a lot to think about here.
So
David, you're clearly a think. What's up, Dennis?
No, I'm just going back to, obviously, oil stock kind of makes sense in an inflationary environment, so I get that. Is there anything else, you said some consumer staples, is there anything else that makes sense, if we are sticking around at a higher rate, if they are going to start raising rates and starting to tackle this inflation problem, is there any other sectors that make sense here?
I think, I don't always look at things, from a pure sector view because I'm not a thematic investor, right?
Okay.
We do the work in the footnotes.
Yeah.
And so we love to be specific and make
Okay.
sure
Well, we love specific
Well,
too, so we'll take it.
I would love to hear what is one crazy thing you saw this past earnings cycle in the footnotes.
Yeah, well, we just did a couple reports. We published the companies in the S&P 500 whose earnings were most overstated and most understated.
Yeah.
And one of the craziest things we saw in a firm that understated earnings was Pulte Group, and that's another space. And in terms of sectors, we're pretty bullish on a lot of home builders too, because we just feel like there's more demand than supply, and that's a good thing. And some of the top performers in that space have been really profitable. But Pulte Group has understated their earnings by 60 cents per share, or about 10%. And most of that comes from unusual expenses in relation to interest that was related to debt or things that are no longer on the books. And there's 160 million of that that is hidden. You can't find on the income statement that would meaningfully or cause the company's earnings to look worse than they are. There's another 3 million in severance, 2 million in land impairments. A lot of times the work we're doing, it just adds up. When you look at all these little things, that's what's key to our technology, is that we don't have sort of threshold of materiality where, oh, well, it's just too small, we don't care about it. Our technology can look at all these things, and when you add them up, they become meaningful. So 32 cents a share, or about 165 million in unusual expenses that cause them to understate earnings, which is really interesting because about 80% of the S&P right now has overstated earnings.
Huh. You don't see that every day. What's up, Joel?
I mean, David, I mean, you're sounding extremely bearish, right? And I know that you like to do your analysis, off the earnings. We just finished up our earnings season. So do you think it just for, the next earnings season coming up probably in not too long after the first of the year? You think there's just going to be just a bunch of misses and a bunch of lower guidance just across the board? I mean, that's the feeling that I'm getting, because we know what moves stocks most is earnings and the fundamentals. So, are you just looking for some disasters here in Q1, and where are they going to be?
Joel, the natural reaction is exactly what you said, right? That, oh, we see that it's moved away from the mean or moved away from the truth, so it'll revert immediately. What we've seen in the last several years is that you don't know when it's going to revert. You don't know when they're going to correct or when the earnings will come back in. There's a lot of tools in the toolkit for companies to manipulate earnings.
Mhm.
So I don't think it's all going to come back right away. It'll come back in pieces. And I think what you're going to see, and this is probably what Washington wants, Congress, the White House, and Powell, they want a slow squeeze. You don't want to choke out all the excesses right away. You want to do it as gradually as possible so as to not discourage the marginal investor, right? And keep the markets intact. That's the goal. You want to keep the train on the tracks. You just need to slow it down. You don't want it to be derailed. So, Joel, that's kind of my theory on when this is
Okay.
going to happen. That means we're walking in a landmine, right? Or field of landmines. We don't know where the blow up's going to come. And that's why we built technology to do large scale diligence across all of them. So we kind of have radar where are all the landmines and pick our spots intelligently and just generally avoid the landmines. That might mean we miss some of these fancy, sexy, growthy names that go to the moon before falling back to earth, but we like it that way.
Are you taking a defensive posture as far as your own individual holdings and raising a lot? I don't need like specifics, but I mean, with the stance that you take, I mean, there's always times to lighten up in the markets. Is that, are you still for the theory of the long term theory the market goes up? Or are you taking some, making some debate because everyone talks about Tina. There's no alternative. Are there alternatives out there?
That I mean, I think it's a great point. I mean, that's part of what's driven U.S. markets the way they have is that where else are you going to go? You can put your money in Russia, China, Europe, Japan, right? And so it's by far the best place. Personally, I don't do a lot of trading at all, just because I like to stay objective.
Right,
I don't want
neutral.
people to say them. Yeah, I just don't want to say, hey, you're talking your book. Um, I do admit though, a couple of months ago, I did trim a lot of positions that had done
Okay,
extremely well. And I would, on the margin, I'd be thinking about trimming as opposed to buying.
okay, that's a great
That's
answer.
that said, I do believe long-term holding of high quality names, like firms like Microsoft, it looks expensive. I wouldn't buy it now, but I wouldn't sell it either. I wouldn't try to time it. Apple, Google. I mean, these are businesses that have genuinely innovated that are still relatively, I mean, they're not cheap anymore, but gosh, compared to an Amazon or Netflix or Tesla, they're super cheap. And they've got huge moats, huge cash flows. We just did a recent expose on Microsoft about how when you think about that business, you don't just think about how profitable it is or how fast it grows, but you got to think about the sustainability of profit growth or just how wide the moat is. Because goodness gracious, I mean, if there's ever been a firm that like generates serious cash flow for decades and really high returns on capital, Microsoft and Apple just are head and shoulders above everybody else with returns on capital that are way above the mean and have been sustained at that level for a long time. And that's the kind of stuff like maybe you never sell that kind of stuff, at least until it gets ridiculous expensive. And it hasn't yet. Neither have.
Hey, fun fact: today is actually the 5-year anniversary of the day that Microsoft bought LinkedIn. David Trainer, David, I like you, man, because you're measured, right? You're measured. On the one hand, you got things you don't like, you got a couple things you do like, but you're not too much in either direction. You're measured in your approach, and I dig that. So David Trainer is the founder and CEO of New Constructs. Newconstructs.com is his site. Check it out. They do some really good research. David, always a pleasure, man.
Thanks,
Happy New
David.
Year, happy
Thanks,
holidays.
David.
We'll talk to you
Thanks,
again in the
guys.
new year.
I appreciate it.
All
Good to
right.
be with you.
All right. Hey, if you have a ticker for us, drop it in the chat. We will take a look. We got about 7 minutes left in the hour, after which Mitch will hop on, run solo for a few minutes while I get ready for our all access show. So let's do some ticker time here. Drop your questions in. We will take a look. The first ticker I see was Bristol Myers from RSP. So we talked about that one yesterday because they had the buyback and the divvy
Yeah.
raise, and it had a good day, as you would think.
It
Any,
did.
any
It
thoughts?
did. Oh,
Massive resistance at 60 is the problem on this one. I'm even going to look at the book because I just see it jumping out like a sore thumb. 51,000 shares. It does stand out a little bit there. 60 just looks enormous. So I don't know. It's come back a long ways from the lows. I'm not jumping in it now.
gave you a shot yesterday on this one because we had talked about the quintuplet top at the 57.80. It opened 57.26, and let's see, did it zig and it zag when it got through there? No, it took it early and took it out. Now that's going to be support. Let's see. We're trading at 59.17. I'm gonna go a little bit ahead of Dennis. Ah, man, this 60 is the number, but the sellers started stacking up at 59.70. Here, a couple highs in a row: 59.70, 59.75, 59.94, then 60. So it doesn't get thick until the upper 60 handle for BMY. Fit on a pullback, we probably won't see it today. Supported 57.
What about Accenture, ACN? Have you guys seen that chart? This is from Rock the Cage 55. Wow, Accenture. I had not noticed this. All-time highs.
Oh, oh boy.
I've got a position in it, so I can't talk about it.
Oh, of
Okay.
course he does. Some random stock.
Well, Accenture's not random. It reports this week.
Oh, do they? All right.
Yeah, Thursday.
I didn't know that.
Wow. What it got? Did it get some news? Did it
Uh,
have earnings or what?
Dennis,
Yeah,
Thursday.
that
They
was
report Thursday.
Thursday. Okay. I won't say. I'll just say right now. New all-time high yesterday, but a red candle. But I'd say right now I'd use the close as resistance, 377.72. I use that as resistance. I don't think with the weak market you'll see your 381. On the downside, under set next daily support level is 373. But this
uh,
is like this is hardly traded any volume, 845 shares.
yeah. Somebody, I forget who, asked for a reasonable entry in GlaxoSmithKline GSK, which is also on the doorstep. Oh, I'm sorry. No, I take that back. It is not on the doorstep of all-time highs, but it's on the doorstep of a 52-week high.
It's such a range bound stock. It gets in the mid 30s, it's a buy.
Yeah.
Gets up in the upper 40s or mid 40s, it's a sell. I mean, this stock has been range bound for a decade. So is this the time? Is it going to go through 45 and break out to 50 and 55 and 60? It's a great company. The dividend yield is good. It just has never been the play to buy at a 45 because you eventually get a shot back
Yeah.
at 35.
Yeah, I'd even go. I mean, the longer it takes to get to 43.50 and take that out, look for a little bit of a rollover. I mean, you're after a move from 41 to 43. I don't really see. Or I mean, depends how much you're willing to risk on the stock, but I don't know. I don't. Three lows on the daily at 52.70 or 42.70, but if I did step out there, I'd only give it to the next daily low at 42.38. So I'm kind of with Triple D on this one.
All right. So many of these charts look identical. I'm trying to find ones that don't. Like all right, Visa. There's not many charts that look like Visa because Visa had a much stronger bounce than a lot of these other crazy. Well, Visa and Mastercard together, but like those two had a much stronger bounce a couple weeks ago than like a lot of these other way oversold names, or oversold is a relative term, but a lot of these beaten down names.
Yeah.
Visa and Mastercard bounced hard.
Because they move opposite to all that stuff, because it's the disruptive technology that's supposed to disrupt their businesses, and that's why these stocks were getting sold, and now the disruptive technology stocks have all been disrupted. So you look here, and that's why they've bounced. But with that being said, I don't think that technology is going away. I don't think it's good news for them. I would sell Visa, and I've already obviously hedged my MasterCard. So, I've held that in my portfolio for 15 years. I intend to sell it in January, so hedging it out until January, so you can tell how I feel about the sector.
If you feel like you
Or
need
those
to own
stocks.
it on this pullback, I'd wait for the gap fill at 204.22, and that's just about half of this move here. Comes in at 202. So, bad day yesterday, trading down in the pre-market. So if you feel like you absolutely have to have this in your portfolio, maybe wait for the 202 area and then leaning on the 190. But it just got to pop and now pulling back. So definitely working on a green candle this month. That's a positive thing. But
After 15 years, I'm removing MasterCard from my portfolio in January. That's how much I like it.
Wow.
okay, there you go. That's a statement.
One more. How's the cat doing, Joel?
Cat hat and French chapeau. You guys know what that's from?
No idea. What
Come
I
on.
don't know what you just
I
said.
just said it. The cat in the hat. You never seen that?
I've seen the
Come
cat.
on.
I've read
Which cat in the hat?
what? What are you talking about? I've read the book. That's it.
Okay. Though you've seen the movie though, or the
No.
cartoon.
Yeah. We've all
Okay.
seen that, Joel.
Triple top 206.
Never heard of the cat in the hat.
Anyway,
Triple top
That's
206.
sarcastic.
You got to get through that. If you're looking to buy this on a pullback, you've had 191 to 206. That's a 15-point move, 7.5. I'd be patient, wait for 198.5. 200 if you want to try it. If you feel like you want to try along on this one.
all right. Cool. It is 9 o'clock. So here's what happened, Joel. We'll see you later.
Yep, I'm gonna go.
Wait, no, don't leave yet. We need the dad joke. Thank you for the
Dad
reminder.
joke of the
Yep.
day.
Yep.
Well, over the weekend, I'll catch up. Dads love quoting Top Gun, especially wearing aviators. That's not me.
All right.
Dads love asking I've never heard of this one. Does it smell like Updog in here?
Joel, what's up,
I've
dog?
never heard that one either.
Wait, what's up, dog?
Exactly. What is that?
I don't know.
No, I
That's
just
a
said it.
weird one.
I just asked you, what's up, dog?
Oh, the smell. I get it. It's a joke.
And then the one
Still
for
going
today.
with Joel's. What's up, dog?
What's up, dog? What's up?
Dads love showing off their #1 dad mug, even if they bought it for themselves.
That's true.
Not very good ones. Okay, I'm gonna go cover the not good ones this
I'm
time.
at a
Okay.
loss today. I don't even know how to approach this market today, so I'm just gonna buy dips, sell rips like I usually do, and I'm sell short rips and buy dips. I mean, that's all it's working here, and the selling short is working better than the buying. So
All
I'm
right.
sticking with that. You know, you're looking at some stocks. The Unity software is interesting. It's the only one that is interesting because it did get an upgrade today. It has been sold off with the overall market here. It was showing life, like kind of had like a little reversal day going on there yesterday. Unity software is interesting to me. I'm not in it. I'm kind of want to be. $130.88 though. It's $10 off yesterday's low, which makes it trouble. Like, where do you stop yourself out? But I wouldn't be surprised at this one. If we start to turn, this one will go green first because of the upgrade today.
All right. We'll see if that plays out. Have a good one, Dennis. Mitch was in the background, and he was writing down all the tickers that you all were dropping in the chat.
Literally was.
There we go. Perfect. We have a list here. Mitch, I'm going to let you run solo because I have to go prepare for Benzinga All Access, our next show, which is starting in around 13 minutes from now. I've got like 8 interviews scheduled today. It's going to be a big one. So I'll catch
Anybody on your radar that we should be looking out for?
well, at the at the risk of playing favorites, I'm into this hire car company. Wink is interesting. Wine, I'm interested in that.
I need some wine.
We got we got Oblong, which is like a cool like media play. So we got some cool companies. I'll see you guys over there in about 13 minutes. But in the meantime, we'll let Mitch run with some ticker time. So
yeah, see you there, Spencer.
All right, catch you over there.
All right, guys, let's go into some of these stocks. I know out there it's a tough market right now. We've been talking about in the chat market breadth. Of course, we've been looking at some of these stocks. I mean, 60% of stocks are underneath that SMA 200 in that bearish zone. So until this kind of changes, I'm going to definitely be watching on the bear side. Let's talk about some short opportunities today. Of course, I usually do sector to industries. So let's look at technology. An area where I'd pay attention to is software application. We could see this. This looks like a dead cat bounce to me. A nice little bounce, high volume on that bounce, declining volume on the raise up. If it was increasing volume, then we wouldn't have had a negative divergence here. So to me, this shows a dead cat bounce. I'm going to be looking at some of these for shorts. Asana was one that I looked at short yesterday. Missed the kind of moves through the low, but I'll look to see if it can continue down today. Another one that I went short is Tesla. So we'll see if Tesla can get into that gap zone. I've been drawing this gap zone. I think I drew this on November 10th. I've been watching for this to come back since all the way then. We're finally getting into that zone, so I'm going to look for a move towards 900 today to find some support. MasterCard is my top short of the day. I'm going to be looking for this to break down through the 339s, 340s today, out the gates, and we're looking for this trend line to also get broken and head down towards that 340. One thing that also shows on here is the same thing, right? Declining volume on the move up, showing us that negative divergence that it wants to come right back down. I'll be watching for this to turn back down today. All right. Why do I like MasterCard? Because if you see Square, it's trying to take out the lows. So I'll try to see that one, make sure that it takes out that low. And then also look for PayPal to get that drop too. Visa could also be a short, but I haven't liked the price action that I saw in Visa. I'll be looking for more of that MasterCard short. All right, catching up with the chat. I do want to mention one more, though. Pay attention to software infrastructure. So let's go to technology. We go into their industries here. We're going to take a look at software. And then we're looking for infrastructure. We put it by capitalization here. We want the biggest stocks, right? So we want to pay attention to the big boys. So Microsoft turned around yesterday. We're going to see if it comes back and tries to attack this kind of low, this 325 today. Does Microsoft come back in that area? The big one to watch also is Adobe. It had a hard candle when we broke down that one time, bounced back. I'm wondering if it gets back there towards the 615s today or the 620s. That will be on my watch. Of course, if you look at software infrastructure, also the same kind of looking chart. Also dead cat bounce kind of look. If we get this flush down, I'm going to be definitely looking for some of these to get short. All right, catching up with the chat. What's going on out there? It's good to see a whole bunch of loyal listeners. I wanted to give some shout outs to some people. So definitely shout out to Shelly, Richard, Spackman, Paul, France, Eagle, Daniel, Elite, Matt, Franz. What's going on out there, guys? Astora, Watermelon, RM, Vape King, Toronto Dave, Richard. What's up out there, guys? It's good to see you guys in the chat. I love to see you guys definitely talking in the chat. And that's what it's all about. We're a community here on Pre-Market Prep. Let's keep it going. Miss Whitehorse, I see you. All right, George, let's go ahead. Let's take a look here. What is going on in the market right now towards the bell? Let's take a look at the SPY. We're starting to see some downward action. We actually started cracking down here. The real question is, do we get a continued down move at the open, or are we going to get a bounce? I'm going to take a look here at Beyond Meat. Mentioned in the chat. We talked a little bit about it. I think this could be a potential short. What I would actually look for this one is for it to attack a breakout look. So make it, have it look like it's going to 67 and then quickly turn around. So if we get this pop up into that 67 and then a hard turnaround, that's what I'll be looking for in Beyond Meat to see if we get that turnaround look. Another one that was mentioned in the chat, Oracle. Let's take a look here at the daily chart. So it looks like they're calling out a gap fill. So can it fill this gap on the downside? I'm going to be watching. You know, it did gap up pretty significantly there. We'll see if it comes back on down. I definitely look for a target towards 98 today. We'll see if we can get that look. Of course, the 98 would come into play with this resistance. Let's see if we can take that out today. 98.28 on the downside for Oracle. Catching up with the chat here, I see a lot of people talking about AMC. AMC's just been, I drew the circle, guys, on the 24th. On the 24th, I was like, yep, from here on out, if we can't get to 40, I'm not bullish AMC. And I talked about this on Money Mitch with GME. When we broke 200, same thing. If we can't get back to 200, we're not in bullish stance here. EDR being mentioned in the chat multiple times. Let's take a look here. This one has been trending well. Look at the weekly chart, trying to take out highs here. But you've done now a couple of wicks up here. Look to see if 30 can hold today. If not, it looks like it could come back to 26. All right, I want to keep going, rock out as many stocks charts as I can do before 9:15. You guys do me the favor out there. Smash that like. I'm only seeing 305 like, 1,200 people here. What is wrong with you guys? Come on, support us as we support you guys, doing this absolutely for free every single day. Snow being mentioned now. Hit that like button. Let's go. All right, let's take a look there at Snowflake. If you actually see, I've been drawing these kind of trend lines, these speed trend lines. We're in this pattern right now where we're trying to hold this 340s on pullbacks. If we take out 320 is when I would start getting concerned about coming to 300. But for right now, it still looks in a bullish sense for me. We'll see if it can get back up there towards 380 and just stay sideways here. If it stays sideways, that's a good look. And this is the weekly. Look at the daily. You see how you're trying to get above these 370s. Can't get there. Just make sure that we hold the 320s today on pullbacks. All right, let's keep going. What's up? What's up out there? Drop the likes. Let's keep it going. Run up the likes, Miami. Are you an island boy? Let's go. All my island boys out there, hit the like. All right, so Daniel mentioning Stitch Fix. Is it going to 10? Let's take a look there at Stitch Fix. All right, so Stitch Fix is down to 18. Did a little bounce here towards the 27 resistance or support and then really rejected hard there. Now going sideways. Could break the lows today of 18, but just be careful out there. This one is already retraced a significant amount. I'd be looking for stronger charts that are breaking down. One that could turn around that did find a bounce was DraftKings, right? Dead cat bounce. It could take out the lows today, so just be careful there on DraftKings and Penn. Right now, a lot of stocks are looking more on the bearish side, so you got to be careful at times like this. Why? Because a lot of times we can get squeezes, right? So we could get some squeezes to come out of this downside action. What are we looking for? We're going to be looking for stocks that are oversold and have good catalysts that come out that could reverse the story, right? Right now, everything's looking to the bearish side. Everyone's starting to be a little bit worried. You want to see the story turn around. You want to see a good positive catalyst come out, maybe some future guidance. Those are the kind of things that can really swing a stock and then all of a sudden short squeeze those shorts. All right, catching up with the chat. What stock to look at here? What's going on out there? I see GRTX being mentioned. Let's keep it going. MP, that's an interesting one to take a look at. Let's do it. All right, MP. All right, MP materials starting to come on down here, looking like it's trying to come back to 40s. Let's look at my other favorite, PLL. Yeah, same thing, coming back down. Actually on the pullback. So just be careful with these. I do think these could have a good run into next year, but it is looking like they're on a pullback right now. One that you can watch also is LIT, because lithium, right? MP, lithium. So look for this trend line to kind of hold here. We broke out of this level. We tested it before. We're just starting to crack it now. We don't really want to be closing down here. So let's try to let it hold there. If not, you could see a turnaround in some lithium stocks and it come back down towards the support 80. Then you can come back towards the other resistance 70s, 72s looks like it, and then down towards the 55 area. So those are the levels that we'll look at. All right, Lucid being mentioned in the chat here. Let's take a look at that one. I know that one's a very popular one. So to me, 38 is going to be very important. If we hold that, we're still looking bullish, but it is looking like it wants to break that down. And with all the kind of negative news that we've been seeing in the press, and not really the upside look right now, I do think that we're going to come back down closer towards this 28. And so that's going to be my level to watch here. If we could break through 36, I do think we could come back down and try this 28, eventually getting up. But I do think we could come back down to these levels. There was a major resistance for so long. So look for us to come back in that area. All right, Volta being mentioned in the chat. Cars is actually one that was on my radar. I know Quantum, you want to talk about cars. I want to talk about car right quick, but I'll get into cars for you. I got about 2 minutes left, so I'm going to hurry up here. So car is one that I'm looking for it to break down big. You know, I would look for a pop to 250 to give me a little bit of a fake out look. So I'm actually looking for the stock to do kind of one of these. I broke the support, I come back, I find resistance, and then it gets that crack down. So I'm going to be looking to eventually short car after this huge run. We'll see if we can get that. The next one I'd take a look at cars.com. We've been looking at autos, right? Used car sales really going up probably. I think you're going to continue to see this a little bit at least. Did we fill this gap? Yeah, just be careful because we did fill this gap yesterday and we could reject from it now. So you need to see a strong move above this 18. Let's take a look at the pre-market. Pre-market, it's all the way down towards 1675. Needs to find support and try back to the resistance. But right now it could break down towards 16. All right, Chegg, last one of the day. So you guys smash the like. Can we get 500 likes? Let's go ahead. So Chegg is the last one I'm going to do right here. 914. We're going to look for this to crack down. Can this fill this gap? I'm not sure, guys. I don't think they have the upside look, but I'll tell you one thing. The volume is definitely coming in here. You're starting to see it come back, but you want to see it get back towards 11 million, testing up there towards the 40. For right now, I think it's a no touch for me. It looks like it's pulling back and could continue to pull back to maybe I'd say this 20. That's kind of the support level that I'd be looking at, 20. And then from there, it could come back to 12. Just be careful there with Chegg. I just don't see the upside story. Maybe you guys see it out there, but we'll take a look. All right, guys, that's going to do it for me today. I'm going to get you guys to all access, but stay around. Don't go anywhere. Even if you don't want to maybe listen to the companies kind of present, I'll tell you guys, stick around, you guys, because I'm going to be live trading in the chat. I know that we normally go to live trading. So what we want to do is bring the community on over to that chat, and we'll be talking about some trades in there. So I'll see you guys there. Smash the thumbs up. And like always, guys, we'll see you next time on Pre-Market Prep. Smash that thumbs. Let's keep it going. Have a good trading day. Be careful out there. And like always, risk management over everything, guys. We'll see you next time. Stay tuned, guys. Up next, you guys got All Access with Spencer Israel.